Welcome to Spa Boss Talks, the go-to podcast for estheticians ready to elevate their game in the world of beauty and business. I'm your host, Nichole Lancaster, an esthetician and former spa manager with a passion for helping you turn your aesthetic skills into a thriving business. Whether you're just starting your journey in the beauty industry or you're a seasoned pro looking to take your spa business to the next level, you're in the right place. I've walked the path from the treatment room to managing a 6 to 7 figure spa, and now I'm here to share the lessons, challenges, and triumphs with you. Together, we'll dive deep into the business side of aesthetics, from mastering marketing techniques to building lasting client relationships and everything in between. Get ready for candid conversations, expert interviews, and actionable advice that you can implement right away. Spa Boss Talks is not just a podcast, it's your go-to resource for becoming the spa boss you were meant to be. So whether you're tuning in during your commute, while treating clients, or winding down at the end of your day, get ready to be inspired, informed, and empowered. This is Spa Boss Talks, and I'm Nichole Lancaster, your guide to success in the world of aesthetics and business. Welcome to Spa Boss Talks, the ultimate podcast for estheticians who are seeking to master the art of business in the spa industry. Today, I'm speaking with Agata Gozdziewska, and she is the proud owner of Esthetic Bookkeeper LLC. She is an accountant who specializes in the beauty industry, which is amazing for us, with a deep-seated passion for beauty. She has had the privilege of working with some of the best. So her journey includes an accountant at the luxurious Bulgaria Hotel Spa in London and a dedicated role as accounting manager at an esthetician school right here in Tampa. She attended the University of St. Joseph, where she received her Master of Science in Management. She is QuickBooks certified, among many others, and now she is here to blend her financial expertise with her love for all things beauty to assist professionals in our industry. She's going to keep your financial books as beautiful as your work. Thank you so much for being here today, Agata. I am just so excited and so privileged that you said yes to coming on here and educating all of us about our finances, our books. Thank you so much for being here today.
Of course, thank you for having me.
Now, as we were talking just a minute ago before we started recording, I think that one of the big troubles in our industry, and maybe one of the biggest opportunities, is our lack of knowledge when it comes to our books and when it comes to our finances. A lot of us don't even know, like, should we have separate bank accounts, how we should take owner draws. We don't know anything, and a lot of us are operating from our own personal accounts. We're spending money how we spend it. We're not tracking. Our measure of success is basically, can we pay our light bill or our suite rent for the month? So we have some pretty in-depth questions. And like we were saying earlier, it could be a little scary for some of us who don't understand some of them. Some of the things I'm going to ask you, I don't understand, and they're personally to get answers from you and knowledge from you. But I definitely see this as one of the biggest opportunities in our industry. So first, I just kind of wanted to ask you, how did you become interested in aesthetics? You were never an esthetician, right? Were you ever in the beauty industry? Like, how did you come specifically interested in our industry?
I think it started in childhood, which is very interesting. I always had an interest in beauty products. I was like a little junkie from like teenage years. But I always, I was always into math and business. So that was sort of like my main goal. But the beauty part it was like my hobby. And I pretty much just continued as I grew. It continued like going side by side. So it was like a fun part, which was the beauty part, and then was the serious part, which was my studies and becoming fluent or as knowledgeable as possible in accounting and business aspect of the world.
I love that, because you're showing people that you can be in our industry, but you don't have to be an esthetician. You don't have to be a service provider. You can find other ways, like accounting or finances or bookkeeping, but still be a part of this amazing industry.
Of course.
So you were an accounting manager at an aesthetic school, and you were an accountant in a hotel spa in London. So you have come across and had conversations with quite a few estheticians. You own your own business now. You freelance where you do bookkeeping and accounting and financial analysis for estheticians. Can you share with us some of the common challenges that estheticians have when it comes to their business? Some of the and maybe some of the proper accounting practices that you think that we need to do as estheticians? Talk to us like square one, like we don't know anything. Because like I said, a lot of us don't.
So of course, when I worked in the spa, estheticians were on payroll, they were employees. So pretty much the business was paying for their training. They were pretty much, they had a set schedule and they just showed up, do their work, clock out. So that's something that they prefer to do. I became friends with a lot of them. This is what they felt like it was the best solution for them. They didn't want to go into their, they didn't want to go into the business. They didn't want to start worrying about the behind the scenes part of running the business and being on their own. So that was a little bit different part of the aesthetic industry or spa industry, because as you know, there's many ways for estheticians to be an esthetician. When you're at school, they teach you you can write for the magazine, you can start your own business, you can work for somebody. So the spa in London was pretty much set up this way. And then when I started working for the aesthetic school, I saw a lot of estheticians going on their own. They already pretty much while they were at school, they were asked to do a form of a business plan, what they want to do with their license, also what they like the business plan, the social media. Like there was a lot of things that they're taught at school to do. So I've noticed, and I heard from before they graduated, which way some of the estheticians want to go. And then after they graduated, because the program in Florida is fairly short, so I was able to see how they started, how they went through school, and then how they continued. So it was interesting to see the success stories, and also not necessarily failures, but a little bit of difficulties, that some of the estheticians had. And then also that's what I learned from being an accounting manager, from witnessing the journey of an esthetician in Florida. But also another aspect of me being interested in the industry, being a client, like me going to the spas, because I love to receive spa services. If I can do something myself, I'll do it, but otherwise I'll just go to a professional. So it was interesting to see, because over the course of the years, whenever I had time, whenever somebody's like, what can I give you? I'm like, give me a facial, give me a massage, so I tested, but pretty much just was able to experience a lot of different services and visit a lot of different spas, some different states, different countries. And this is something that I also noticed, you can see as a client, if the spa is struggling, you can see if it's doing well. It doesn't matter if it's a small spa or if it's a big destination spa. So I actually, this is something that also interested me. And as I mentioned before we actually start recording, I also have a degree in hospitality and tourism, and I specialized in spa industry. So when we were writing different papers, I sort of focused on that, and I used it. So I was sort of blending in, pleasure and school requirements. So I would go in pretty much, not necessarily a secret shopper, but for the lack of better word, I've done it. And then I would write a paper on, obviously very anonymous, not even mentioning the spa, but what I've seen. So it's just something that it's pretty much, once I was working for the school, and I've noticed that other side that I mentioned before, the students, some of them were making, they were successful. Some of them had, difficulties. I decided to open a side business as a bookkeeper, and I educated myself on the bookkeeping side, because it's also as an esthetician, whether it's a bookkeeper or an esthetician, accountant, pretty much any profession, you have to constantly learn, and you don't know everything from the very beginning. So for me, I became QuickBooks certified. I decided to really focus on one software, and then I become so proficient that I actually can have some sort of expertise, and I can help people out with running their businesses. You see bookkeepers who have a lot of different software, they offer a lot of different software solutions. And one of my things is, or something I believe in, it's specialize, whether you're a bookkeeper, whether you're an esthetician, just specialize, make your life a little bit easier. As you grow, you can add on. but focus is what you need, especially at the beginning.
I think it's so important, like you said, to we call it niching down. So in our industry, some of the most successful providers have one thing that they're really good at, and they build off of that. So they're really good at one service, like waxing, and then they build off of that. And for us too, it's very challenging and very confusing. Even just QuickBooks in itself, me going in there with QuickBooks, it can be a hot mess. Like I don't really understand what I'm doing. I don't understand if I'm categorizing things. So having someone who knows specifically that one software and works with it, it's a lot easier for us to understand and like digest our finances, excuse me. So when you saw the estheticians graduate and you saw some were really successful and some were having opportunities and challenges, what do you think set them apart financially? Were the successful people organized in their finances? Did they use QuickBooks? Was that something they were tracking? Were the people who were having obstacles or opportunities really just not taking care of their finances or tracking where they're going? Like, what do you think, in your opinion, really set the successful apart from the people who had some opportunities and some learning?
So what I've seen is when people started too quick, too fast, when it became too big. So, buying devices and not deciding on a product line, just pretty much, being just spreading themselves thin, and then you're losing track of everything. It's not just money. You're losing track of your time, losing track of your money, you're losing track of your, like, pretty much people you work with, because you might already work with somebody, or you might already thinking about, like, talking to somebody. So you pretty much, it's hard to keep track of everything if you start too big. And I've noticed that esthetician who started slow, like they just, they did. So obviously, when you're at school, you do a lot of hands-on, you do hands-on on family members, you do it at home as well. And so, and then you build on that. And then like, I've noticed that the easiest way to enter, like, business ownership as an esthetician is just you renting the space somewhere, just a very inexpensive space, deciding on one product line, and pretty much just track, like, every day you track your time, you track your money, and like you mentioned before, make sure that it's separate. So before you even decide to go on your own, open a separate bank account. A business bank account is ideal. However, even if you have another checking account and you start the business just running it off a personal separate account, that's a good start. And obviously within the next few weeks or months, you just open a business checking, because you also have to have an EIN number, which is the number that technically is needed when you're planning on hiring employees. However, banks need that number to open a business bank account. And there's something that I learned as well. And something to remember is I am also a business owner. So I go through all those things. I have to educate myself. I have to stay on top of the laws. And I have groups, like Facebook groups, other bookkeepers, accountants, and we educate each other. We help each other out. We ask questions. It's like any other community. So pretty much, so I had to go through all of this, opening a business bank account, and it wasn't easy. I had issues with it. It was 2020. It was right before pandemic. I decided to do it as a side business, and so I learned by going through those things. So pretty much keeping it separate, keeping track of receipts. And I know there's especially when you go to very seasoned accountant, like, or somebody who runs the business, they've been in the industry for so long, and they're like, you don't have to worry about this, you don't have to worry about that. But it's just something, because they look at a bigger picture. They look at helping you file taxes. So they're just gonna, take all the income, deduct all of the expenses, they're gonna get a profit, and that's what, they file your taxes on. But you as a business owner want to know how you're doing, weekly, monthly, quarterly. And some accounting companies, they do offer that service, like they call it CFO service, which it can be quite pricey. So it's pretty much like an esthetician. You offer different services and you price them differently. Same things with accountants or bookkeepers. They offer different levels of services, and it's not every accountant or bookkeeper is equal. And a lot of bookkeepers and accountants also specialize or niche down. So they only work with lawyers, or they only work with doctors. So I specialize in estheticians, which is a very small niche. And to be honest, I have had not much success convincing estheticians, especially very young, like freshly out of school.
Mm-hmm.
I think when we would get in touch, they would be a little bit overwhelmed and terrified. And I think some of them, because there's a lot of things as an esthetician or new business owners that you have to deal with. So I felt like accounting or finances were pushed on a back burner. Like, I'll deal with that later. I'll deal with that later. So I'll call Agata in 6 months, and it's like, because they were, and I think the most important thing is, and this is what, because obviously we all open our business to make money. However, with me, it was not just about money. Like, I really wanted to help because I had a full-time job.
Yeah.
So it was for me like, let me help you for free. Like, I was just really giving up my time because I wanted to help out. Because I figured that if they just get into a habit from the beginning, just, get some tips from me, or maybe like if they don't understand something, show it to me and I'll help you out. It's going to be easier down the road. It doesn't have to be necessarily mean hiring me. Just call me and ask me. Like, I'll be happy to help. I'll be happy to find out for you because it was a passion in a way. Like, just like it was passion for me to go get a facial, passion for me. So let me help that esthetician. Like, it's just, one esthetician at a time. And that's pretty much it. I mean, like, if they start slow, if they start tracking from the very beginning, everything, like track your time, track your finances, this is the best way to become successful. Like, this is my personal opinion, and it's an opinion about any industry, but with estheticians, I witnessed this firsthand. So totally, this is my like a rule of thumb.
And I agree with you so much. So my background was in the beauty business. So before I was an esthetician, I've been an esthetician for 12 years. I was a makeup artist, and then I was a business manager for Estee Lauder. So I learned a lot about tracking goals, return on investment. I learned the foundation of business. So when I became an esthetician, I had that foundation. I think it's so important, like you were saying, that we close the gap between business knowledge and aesthetics, because right out the bat is the perfect time to invest in somebody who can mentor you, to teach you how to set goals, to teach you how to run your business, somebody who can mentor you right off the bat about tracking your finances. I mean, I've done it where I didn't, have anything organized my finances. It comes tax time and my accountant's like, send me every credit card statement, every bank statement. And now I'm spending, 3 weeks going through line by line. And, I made more money than I realized I made. I spent more money than I realized I'd spent. But had I been actually prepared and tracking properly from the beginning, it would have been a lot easier. And I probably could have been even more financially successful if I had realized where my money was going or where it was coming from. So like pulling your reports, your total sales for the month isn't enough. You need to be able to have some sort of more detailed breakdown from the very beginning. How much are you spending in supplies? How much are you spending, like you said, in equipment? And starting off, a lot of estheticians think, oh, let me buy the hydrofacial machine for $75,000, or let me buy this big machine for, $100,000 laser. It'll bring in clients and it's only $1,500 a month on my lease, leasing it. But it's not true. It's just so much money going out that you haven't built that clientele to bring in the return on that investment of, that $100,000. I started with a borrowed bed. I started with skincare samples. So we preach the same message, start small. I had samples that were like this big, and my clients didn't know. It was behind them. Their eyes were closed. It was a facial. My products were behind them. A lot of estheticians think they need to invest $3,000 in all the back bar and the retail. And you don't. Even a lot of skincare lines now, like you were saying, post-COVID, actually offer where you can drop ship. So you can sell the products to your clients. You can order it right there online for them, and it ships it to their house within 3 days. So there are so many smart ways. I call it being bougie on a budget. So many smart ways to get around having to invest all that money and to create success. Like I said, I started with a borrowed bed from Miss Bianca, Bianca. I started with a borrowed bed and samples, and I grew it to 6 figures, but it's very important to start small. And I know right now a lot of people are struggling, and I've seen online estheticians who have slower business who are asking, should I go back to school? Should I get the new equipment? Should I do a new service? And in my opinion, the answer is no. Pivot your business and try to find a way to really nurture your business, take care of your business. Maybe there's opportunities in your accounting that you're not seeing. Maybe there's opportunities in your customer service. But like you said, I never think it's a great idea to just invest in big equipment, in expensive equipment right off the bat, or when you're struggling, because in my opinion, I don't think it's going to get you out of that hole. I think there's other ways to pivot. Now we're talking about like going into a lot of debt, buying those big machines versus starting small. Is there any debt in our industry that's going to be good? Are there any times that we should say, okay, let's spend 10,000, 20,000, let's whip out our credit cards, and make a big purchase on it and pay it off? In your opinion, is there any debt that's going to be good debt in our business as, small business owners or solo estheticians?
So first of all, and I think it's across any industry, education is never a bad debt. So this is what, student loans are never considered a bad debt, even like for your credit score. For the companies, when you're trying to buy a house, like they don't look at the student loans as a bad debt. So this is something that is just a general rule. However, so pretty much education and learning is always money well spent, but it's also like you have to be like conscious. You don't want to spend 20 grand right away just because you're learning from celebrity makeup artists. It's like you don't like those not everything is justifiable. However, getting a mentor like yourself, like I believe this is a great way to spend money. And also talking to the CPA periodically, talking to a bookkeeper, just those, and those are not expenses, like pretty much me. I give out so much advice for free that it's not technically an expense, but it's pretty much not being afraid to ask. And sometimes if you need to pay for the professional opinion, you pay, but also like educating. And so, when I worked for the aesthetic school, like I've noticed some brands were offering those certification classes you can do as a current student or as a graduate, and they would give you the kit, and they would already explain the profitability of each kit. Like, for example, obviously I don't want to mention brands, but there will be a chemical peel company, and I believe that was amazing. That was the best one of the best investments that the students could do, because they received a kit that was about, I believe, $1,000 with a training, with hands-on, with a book, and with products that gave them $10,000 of potential income off of services. So when you look at those, this is money well spent, because they will teach you how this investment will make a return. I believe that going into the machines, this is a little bit tricky unless you really, really know that this is like if you see that the clients are asking, like for example, if you're a permanent makeup artist and your machine is not the best, it's already 5 years old, let's say, and you feel like you could offer a better service upgrading this machine, maybe and sometimes clients are very smart, like, and with all the social media, TikToks, Instagram, obviously, people are sometimes looking for certain brands they will ask you, which machine are you using for this? So if you see like you have a multiple clients asking, do you use this pen for this, or do you use this for, and if you see that repeating, maybe it's worth to look into it, and maybe it would be money well spent. Otherwise, just because you have a very nice rep trying to promise you return on investment, but you're a little bit scared, and trust your gut, pretty much. That's the other thing. If you feel you're not ready, if you feel this is a lot, if you know you won't be able to recoup the money for at least a year, I would say don't go there. Not if you're like less than a year in a business, like not when you're like starting out, because this is a tricky road.
And I love that you suggested improving a service that you already do by maybe getting better equipment versus bringing in a whole new service with an expensive machine or expensive equipment that you now have to market and sell. Whereas you could make more money, offer a higher price point on your services if you've built on or improved services that you already offer. When we talk about growing or investing, when do you think financially, like, are there financial markers that we should look at and say, okay, I'm paying my bills, I'm able to save, $1,000 a month. Now would be a great time to grow as a business, like maybe bring on a new piece of equipment or hire someone, or maybe build out my own spa and have people work under me? Are there financial markers where we know, okay, this is the time that we should grow if we want to grow as estheticians? What should we kind of be looking for?
Yes, so I believe like a lot of times people say business is my baby. Starting slow is pretty much letting the baby crawl before the baby walks. But also there's this, old saying that it takes a village to raise a baby, and I believe it takes a village to help the business grow. So pretty much anytime when it comes to finances and growing, just make sure that it's not just you think like just personal decision. Like make sure you get the advice from people who are knowledgeable. Like let's say if it could be a lawyer, employment lawyer, and it doesn't have to be like a big contract. It's just like a discussion. It can be CPA. So a lot of CPAs and CPA. So the difference between a bookkeeper and CPA or accountant, it's not like a very straight line. However, most CPAs, they focus on taxes, tax planning, and they hire bookkeepers that work under them to do the cleanup work, to prep for taxes. So this is what I do. I help with prepping for federal state taxes. Obviously, Florida doesn't have a state income tax, but other states do. So I help prep for that. But CPAs, they look at the tax planning. And when you obviously, when you're paying taxes, especially when you start out, whether it's an LLC, which I highly recommend because LLC keeps separate liability from your personal life. So but it's still considered pass-through entity. So especially at the beginning, so you pay your business taxes on your personal tax. So it's the additional schedule, it's called Schedule C, it's additional piece of paper that you fill out, or your CPA fills out for you filing your taxes. So of course, everybody's personal situation is different. People have multiple sources of income. They have investments. They have sometimes W-2, or they just referral fees. Like, you have estheticians that are also realtors. It's, people, especially after pandemic, people try different ventures. So the CPA takes all that into consideration, and then also looks if you have any student loans, if you have a mortgage, and they help you plan taxes. Because just looking at your business, especially when your business is you paying yourself through your business, that's not a full picture, because it doesn't show everything that's going outside of the business. So I highly recommend, and most CPAs will want you to wait about 3 months so they want to see how your business is doing in 3 months, so they can make educated call and educated judgment. And pretty much with them, I would say that, you would use their opinion on growth, like pretty much where they see, like they see where would you, if it's okay to spend money, if it's okay to go that route. And there's things that I learned because I'm a business owner, but it's still something that I would use professional opinion for. For example, when you are starting the business, or the startup cost before you actually go into operations, they're taxed differently. They're like a different type of expense. They're your operating expense. So they can be, and then IRS gives you like a $5,000 threshold that you can write off the first year. If you don't even have that many, then you can transfer to the next year. But this is honestly something that, because as an accountant or bookkeeper, you don't have big expenses initially, all you need is a computer pretty much. So I didn't have to really deal with that, but I read about it because I had like a little bit of startup, because I had to fight for the license. And then I believe there was one other expense, but they were like very minimal. Like for the bookkeeper, it's very minimal expense initially. But CPA will help you with this. They also will advise you on when it comes to like business use of your car, how this affects your taxes. So there are things that, because I, as a bookkeeper, I don't use my car for my business. Like I don't need to drive to clients. If I would, probably would be minimal, but I'll just track my mileage. But you have two options. You either track your miles, or you do the gas and car maintenance and all the other expenses related to the car. You have to pick either or. So it's your CPA will advise you on which way is the best for you to do. And so it's a little bit tricky. And because those laws are constantly changing, the mileage gets updated every year. I mean, you can Google it, but like any other laws, they can be constantly changed, like throughout the year, or with, so they change, but it's not like they change and they say, okay, starting tomorrow. They would say the law changes starting January 1st. So CPAs, it's their job to stay on top of those. And I usually ask questions about this as well. Like I subcontract from another accounting company who actually works under bigger CPA. Like pretty much we have like a chain of command and we're just asking her questions. I see the bottom line. I see the little things. I'm like, look, you have an e-commerce, you have a Shopify. You are almost where New York sales are so high that you might have to file sales tax in New York next quarter. So that's what I see. I see the little things. And then I bring it up to the business owner and so he knows that he has to file for resale certificate in New York State. And then the CPA will know how this is going to affect it. And so there's a lot of things. That's why it's very important to look for the CPA for taxes, because tax planning is very complex part of the business. And I'm the one that's part of it, but I'm just the one who preps it, make sure you stay on track, you keep your receipts, and also like the cash flow part of the business, which is pretty much what you said initially, like when you went and you had to do it all at once. First of all, it was a lot of work. It was complicated, but it was just a lot of things to do in a short period of time. And then you just realize a lot of things pretty much after the year already ended. Because also when you go throughout the year and I'm not about like avoiding taxes, obviously, but the general rule is everybody wants to pay as less as possible. So if you track your business and throughout the year, you see, like, for example, I'm making too much, like maybe it's going to be worth it for me to spend money on something so I can actually invest. So this way I lower my taxable income and actually are able to get a better return on investment initially and eventually. So this is just something that it's very important to track and very important to have a trusty CPA that's going to guide you with the big decisions.
So if you start to feel that you're in that growth, to reach out to a CPA and get their financial analysis and have them take a look and see if it would be a great idea to grow. I want to kind of talk to you because you were getting into taxes and stuff. And I got a lot of questions about 1099 versus, the employee or W-2. A lot of estheticians are very confused, and I see it all over like Facebook and the internet. And they get a little upset and they throw around, misclassification because they want to know, okay, this is who I am. These are the tasks I'm supposed to have. I feel like this question kind of borderlines between a lawyer's answer as far as tasks they should do and an answer from an accountant. But can you maybe speak to the two differences? I know like the basics, like 1099, your employer doesn't hold your taxes. For W-2, they hold your taxes. But can you touch base on a little bit about the differences between the two?
Of course. So W-2 and 1099 are both forms of paying, most like contractors, somebody who does services for you. However, they're two different things and they're not interchangeable. It doesn't mean that you can do either or. W-2 is when you have an employee, when you hire someone, you ask them to fill out W-4 initially, which, they put the information, the deductions, if they have a number of children, like the stuff that we all have to do at some point. And then at the end of the year, once the year is over, you have to give them W-2, which just shows how much money they made throughout the year. And of course, with each payroll, you deducted their part of the taxes, and then you paid the remaining part of the taxes. So I believe it's about 15.3% right now, the taxes. So the employer pays half and employee pays another half when they are on W-2. And it is expensive for the employer. That's why sometimes they feel like, oh, I'm just going to do 1099 and then it's all employee responsibility. But you can only do it if it's somebody that you really just, it's not your full-time employee pretty much. So anytime when you hire someone and this is their main source of income, you give them the schedule, you treat them like your employees, then they have to be a W-2 employee. They cannot be a contractor. Contractor is only if you hire someone for a few hours a week, like they're specializing in something. You bring somebody in because they do the best massage. And so you just have an agreement with them that, but they'll tell you their availability. They'll tell you when they can come in. This is the 1099 contract. I mean, contract is pretty much business relationship where you need to give them 1099 at the end of the year. So that's like how to differentiate who would need it. But of course, you're not deciding it after the year is over. This is from day one. When you start the business relationship with them, you need to know. And this gets a little bit tricky. And I know it's a lot of, some people feel it's gray area, but honestly, I feel like it could be gray area in different industries. I know it's a little bit gray area in like a real estate industry because it's heavily commission based. So this is a little bit tricky. And this is something that obviously we don't have to worry about. But for esthetician hiring someone, it's simple. If you're hiring somebody and you know they're economically dependent on this position, you give them the schedule and you manage them. You manage their time, you give them supplies to work on, their employee, and you have to run the payroll. So of course, running the payroll involves software, and hiring somebody to do it. Pretty much most of the bookkeepers, one of the services they offer, it's a payroll service, but we all use automation. Like we use there's multiple brands, so I don't want to like right now list them, but it's pretty much, different platforms that you can run a payroll on. 1099 is pretty much you pay by check, like handwritten check, or you pay by bank transfer. And then obviously, of course, you keep track of it. And that's why you need accounting software, because it gets really tricky once you start just, receiving money and spending money and just keeping track of it on a spreadsheet. So that's why accounting software is really important, because it helps you keep it organized. And then at the end of the year, like pretty much QuickBooks already will know and it will pre-fill for you, and you can file through QuickBooks 1099, which will be automatically emailed to IRS, sent to IRS, and emailed or mailed to the contractor. So, and that's like the general rule of how the process starts. I mean, pretty much how you decide. And when it comes to giving 1099 to your contractors, because it doesn't mean it's not just 1099 for somebody who you subcontracted services to. It could be also an electrician. It could be a plumber. If they're like self-employed, or they have an LLC, you might need to give them 1099 as well. So, and actually I'm doing 1099, like this is the time to do it because it's due by the end of the month. So I'm actually educating myself as we go pretty much. So of course, if you pay someone through credit card links or, payment links where you put a debit card in, you don't have to do 1099 for those. So let's say if you pay me, I send you QuickBooks link, and QuickBooks is the processor. So QuickBooks is gonna take care of the 1099. It's like a 1099K. It's a third party processor. But everybody who you paid with like a check or bank transfer, even Zelle, which I learned yesterday, because Zelle is technically it's not like a Cash App or Venmo. Zelle doesn't keep the money. It's just a transfer. So it's considered a bank transfer. You should consider those in 1099. So that's why, and it's not like even me trying to, pitch my services, but this can get so complicated. Yes, I spent hours on one client because we would have a vendor that was paid. It was a law firm that was paid through payment links. The client used debit card to pay them. So I don't have to do 1099 because the merchant will report that for them.
Right.
And so for me, it was like, going one by one, like deciding on which category to fall in. And of course, when you before you pay somebody, that's another very important rule. Before you pay somebody, whether it's a check or bank transfer, you need to ask them for W-9, which is pretty much them giving you the information, their legal name of the business, their location, and their EIN number or social security number if they don't have an LLC. And based on that, you can actually send somebody a payment, where it comes, like a check payment or wire. So just don't pay people because they told you this is how much it was, and try not to hire somebody until you have the paperwork from them. So have the legal information, because what happens is if you pay vendors and you don't have this information, IRS can say this was not an expense because you don't have any backup, because you have to. So pretty much with 1099, you're reporting this, how much they're paid. So they have to report it on their taxes, and then you're reporting as an expense. So your vendor reports the income, you report the expense. If you try to report expense, but the vendor is not reporting the income, the IRS can come in and say, this is your personal expense now. So it's a withdrawing money from the business. It's not an expense. And of course, it's like a very dark scenario, but that's the general rule, is just make sure, just be very careful with paying contractors, make sure you have all the backup. When you have, even if you, let's say if you hire a massage therapist, have them fill out W-9 right off the bat, outside of the actual contract, because I'm sure there's some contracts that people do sign because there's a use of space, there's a use of utilities. So this is something that's very important, but that's like a legal side, which that's something that you would ask the lawyer, because it's pretty much signing contracts with other people. But when it comes to paying, make sure that W-9 is the document that you have them fill out from the beginning as well.
So if you're an esthetician and you're on a W-9, you're getting paid as a 1099, your employer should not be treating you as an employee. And if they are, maybe that's something you either want to change, where you're contracted at, maybe you want to go solo, maybe you want to quit your job, or maybe you want to reach out to an employment lawyer. But if they're a 1099, what percentage of their income should they be saving for their taxes?
So because it's also, like I mentioned, like when you file your taxes, there's other things that are taken in consideration. So I think the general rule is 20 to 30%, and nobody really pays that much, but it's safe to have it saved because, for example, for me, like I have an income from my bookkeeping business, but I also do some investments. So I get papers in February about the money I made in stocks, not that much. I mean, I lost the previous past year, but so I'm going to have a loss that I can offset against my income. So there's a lot of things that go into play when you actually are filing your taxes. Like I have a student loan that I pay interest on, so I get a paper that I can deduct my student loan interest. So those situations change once you go actually into filing, but it's better to have saved up to 30%. Normally, I think it's the 15.3, which is the employer-employee part, but there's also, so that's like a part of the federal taxes, but the income tax is also calculated based on the threshold you are in. So there's a lot of different things going into play. So I feel like saving 30% is better to be safe than sorry. Save 30%, put it aside. And obviously the first year, you just putting the money aside and seeing how your business is doing. However, like the following years, you will have to do estimated tax payments. They're quarterly. So it's something that also your CPA will advise you on. For me, like this past year, I didn't do it. I think I should have, but it's pretty much anytime you feel like you owe more than $1,000 in taxes, you have to pay estimated taxes the previous year. So it's just very tricky because last year I didn't have to. So they say it's usually the first year after you start like making money outside of your W-2, because I had a lot of sources of income. Like a couple of them, and also expenses going from different directions. So I learned as I was going with mine. I find my own taxes because they're easy for me because I understand. So I can answer the questions on TurboTax. I can answer them, but I don't file taxes for anybody else because it's just a lot of personal questions are being asked. And pretty much like for me as a bookkeeper, I want to focus on your business. I don't need to know what's going on outside of the business. I feel like it's like a separation, a little bit of separation, which I prefer. You know, I don't want to know too much. Like, I want to help you focus on your business, and I'll focus on your business. I don't want to focus on, you know, children, spouses, mortgages. Like, this is not something that I need to know. So this is something that goes into play when you're supposed to file taxes. But the estimated ones, I mean, they're saying not to overpay those, so it's better to have like a better idea. And I feel like CPA is the best one to calculate it. I can come up with like a general rule, but it usually with me, it's like we would overpay a little bit because let's be safe than sorry. I think CPA would be more on point with those because they will actually know your other side, all the other, you know, side of your life that come into play. But this is also something very important and something that I had to educate myself in my own business, because it is a lot. It is a lot to understand and take into consideration.
So when you're opening your business for the first year, if you're going solo, there are a lot of things that you can have as business write-offs, a lot of expenses. You said there's kind of that threshold of $5,000. So it is really good to go to somebody like you who actually knows what can be written off, where you can save money, where you can get some more deductibles so you aren't paying so many taxes. Whereas if you just kind of did it on your own, you maybe didn't fully understand where you could save money and where you wouldn't have to pay such high tax rates or such high taxes had you known that you had some of these write-offs. Some of the softwares that I know that you are, like you said, big into QuickBooks. So that's something that you think that estheticians should be using for bookkeeping. Is there something easy? Like, I don't know what QuickBooks does this because I'm not that familiar with QuickBooks, but I know Intuit has that app called Mint, where I entered in all of my credit cards, I entered in my bank accounts, and anytime anything gets swiped or charged, it will automatically categorize it for me. Is QuickBooks something that's pretty easy for us to use that will then tie into our records, which will make it easy for someone like you? What's type of software would you recommend that we use as estheticians?
QuickBooks is also owned by Intuit, so Intuit owns a few products. Mint, it's actually being discontinued. I mean, I think people who are already on platform, I think they're going to be phased out. I'm not sure how this is going to work, but Mint was meant more for personal finances, not the business finances. If you want to budget for your personal life. And I mean, it's not a bad thing to start with because, you know, any solution that you use, any platform is to help yourself stay on track, whether it's business or personal. It's great because you get into habit of doing this. So QuickBooks offers different levels of subscriptions. There's one that is self-employed. It's very simple. I believe it's very similar to Mint. However, I really advise small business not to go that route because you cannot upgrade. It's such a specific software, just money in and out without any financial reports being able to pull out of this. So you cannot upgrade it to higher levels of QuickBooks. So so the one, I believe it was Simple Start, the first one to start. However, with QuickBooks, like any other softwares, like they're changing subscription levels, they change it. So pretty much when I started, Simple Start was the one that was the basic one. And it's good enough. Like, honestly, there's not that many things that you need when starting out. And this will help you. So you connect your bank account, your business bank account, and pretty much the transactions keep dropping. It's called bank feed. And you will go one by one and you categorize it. If you don't know, like as a business owner without using Bookkeeper, if you don't know, you put under uncategorized, or, you know, you would have as a business owner, there's an account. Sometimes it comes with QuickBooks. Sometimes you create it. It's called Ask My Accountant. Or if your accountant runs your books, they have an account called Ask My Client. So it's like a separate bucket that just, you know, to put those in to get more insight later on. And pretty much that's what you do. The tricky part is about QuickBooks and right now they're using even more AI than they used in the past, but it's a smart software. So it learns as it goes. So first, when you start, it will give you it will try to guess what that transaction was based on hundreds of thousands of people that are using QuickBooks right now.
Like a suggestion.
Suggestion, exactly. But it doesn't mean that this applies in your business because it's not that smart, and pretty much it takes into consideration so many people like contractors, restaurants, and for you, your expensing target might be totally different than expensing target for a contractor. So so QuickBooks suggestions, and that's what the tricky part is. Sometimes new business owners, they sign up for QuickBooks and it's great. It did everything for me, but it didn't do anything for you already. It guessed and you just went with its best guess, but it's not something that actually is helpful for you because you cannot make decisions based on QuickBooks guesses. So you pretty much go one by one and you categorize the transaction. And then once you have used QuickBooks more often, then it starts making guesses based on your past. So not other people, your past. And there's like usually different color that transaction will come in. So let's say if you have 10 target transactions and you have cleaning supplies or janitorial, it's going to try guess with janitorial, but maybe in that case, you just went for micellar water because you ran out. So this is actually not janitorial. So QuickBooks will try, but you still need to do it on your own, and you still need to look at the actual receipt. And that's the importance of keeping the receipts comes in, because at the end of the day, you can always see the bottom line and see, oh, this is how much I made in profit, but you actually want to know where you spend the money, not just, oh, I spent that much. No, you want to see where you spend, and you can actually plan out, like maybe you spend too much on certain things. So next quarter, you just cut down on this. So this is what's important. And QuickBooks will help you do that, and QuickBooks will help you pull the reports, like a simple ones. It doesn't have, QuickBooks has so many reports and the new ones are coming out like every week or every month, but there's also an option for like customized reports or management reports. So pretty much if you pull a profit and loss statement, but you actually want to see certain things, you can save it as customized. So later on, instead of you going pretty much starting from scratch, you can just click on the saved one and it'll show you the same data just for the different dates that you picked. So overall, it's a very nice software. There are other ones as well, but I highly recommend QuickBooks Online, and the online is something that I stress on because there's a QuickBooks Desktop, which is a software that in the past you would get it like a CD that you would install on your computer, or now I believe you can download it, but it doesn't automatically update. So if there are any updates, it pretty much you have to buy the newer version of the software, or whether it's a link or CD. But with QuickBooks Online, it automatically gets updated, and it's actually funny because if it changes, sometimes it's from day 1 to day 2. Like I go, those invoices look different yesterday. So it's interesting how they constantly improve and implement new things. And and sometimes when they implement, they'll give you option go old view, new view, so you can switch back and get used to the new view or certain things. So it's just very easy, and it's one of the industry standards overall. Like I see big businesses using QuickBooks Online as well. It doesn't have to be small business. And they have additional features. QuickBooks integrates with a lot of external apps, which is something I want to touch upon in another question if we have time. But because integrations not every integration is worth integrating with QuickBooks, because sometimes it can get very messy. But overall, I believe that QuickBooks is a good software, because you can start, and doesn't mean that if you grow to 2 million, 20 million, you have to switch. QuickBooks can be still good when you do make 20 million. So when you do spreadsheets, at some point it just becomes too difficult to manage. You can manage 100 transactions on Excel, but when it comes to thousands, it just becomes very tricky. And then you have to become an expert in Excel, because then you need to do different formulas on the Excel actually, so it can summarize data for you. So I believe QuickBooks is a good way to go, and it's very easy when it comes to taxes later on, or any type of planning, because the data is there.
Yeah, I'm not a numbers person. So when I'm sitting down and I'm seeing all this, it's very overwhelming to me. And if I'm not understanding it, I'm one of those people that's like, never mind, I'll do it tomorrow, and it never gets done, right? So the easier it is for me, and I'm sure there's a lot of other business owners out there, the easier it is to get done. So you're saying we need to keep all of our business expense receipts. And how often should we actually be going into our QuickBooks to do our bookkeeping? Or is that something where we would hire you and like you would do at the end of the month for us? How should we be doing that?
Yes, so receipts, and another feature is, so QuickBooks Online has an option to have an app on your phone. So you can take a photo of your receipt and it
Nice.
stores for you and it tries to read it. And then when the bank feed, so when you have a bank connected to it, when that expense comes, it finds it in the receipt and matching it automatically. So then you can just go and click and see the picture and, see where you spend it. So it doesn't have to be a
Nice.
shoebox full of expenses.
That's exactly what I was thinking. The
receipts.
shoebox full of receipts. Yeah, exactly.
Yes. So that's what it's good about the QuickBooks feature. And then, yes, sorry, I think I lost track, but can you ask the question again?
How often should we be doing our bookkeeping, or is that something that we should, have the software and then hire someone like you, like outsource? Because I honestly don't want to do my bookkeeping. A lot of us don't have time. So is that something that we outsource to somebody who does it once a month for us? Or maybe somebody just starting out, is that something that they should do once a month in a QuickBooks? How often should they be, or how often should we be in our QuickBooks?
Yes. So when I started my own business, I was on QuickBooks every day. Like, anytime I've seen like a movement, I would just check and look at it. And I didn't even have that many expenses because when I started, I had one person paying me and I would just pay a couple expenses, but I was going because I wanted to see and I was trying to get to know QuickBooks. I was getting myself certified and just trying to see different reports. So I want to, because QuickBooks has options to do like a tag, so tag transactions. So you can pull reports by tag. Has an option to do classes. So let's say if you can do, you can classify, you can have different, if you have different locations, you can put, different location as a class and you can pull reports how each location is doing. You can do, you can make classes based on pretty much anything you would want to see the difference between A or B. So QuickBooks, so I was testing it out. I also have, as a side business, which is actually interesting. Maybe you came across, I decided to make t-shirts for estheticians and sell them on Etsy. But because it's also related to aesthetics, I just have it under one business. It's just different side of the business. So I have expenses and it's print on demand. So I don't actually keep it. It's pretty much somebody else printing for me and shipping it. So I wanted to separate it when I did my report. I didn't want to see it all bundled with my bookkeeping income. I wanted to see it separate. So I have a class for Etsy and I have a class for bookkeeping so I can see them side by side. And I know, how each side of the business doing, which obviously the Etsy is a tiny, tiny part. It was just fun because I learned about e-commerce business as well. I learned how it works. I learned what, how the rules are, what the rules are, how the laws are changing. So this was something interesting for me to learn. And so, I have one of the clients I do QuickBooks. He's using Shopify. So of course, if I would sell products through Shopify, I would have the class for Shopify and then my actual business. So this is something that you can do. And people are, honestly, like estheticians are very smart. Like it's just, you guys, obviously you're my heroes. Like I see there's so many things that you need to take into play. Of course, you're not a doctor, but you almost like borderline sometimes because you see people, you notice their things. You can be psychologist. You can because you talk.
We are, yep.
And then, of course, you don't want to be a dermatologist, but you want to be like, you know what? You want to get that checked out by a doctor. So there's a lot of responsibility on you. And then, can you do your QuickBooks? Can you learn QuickBooks? Of course. But why? That's the thing. Like, you already have so much going on. You already have so much continuing education for your own industry. Why would you want to spend the time to learn QuickBooks? I mean, why? It's at some point you have to just narrow down and focus. And it's pretty much a lot of the, like at school, when you send your child to school, initially you have one teacher for everything, but then with other grades, they have teachers for different topics because that this teacher, this is what he studies and that's what they focus on. They study geography and they're going to teach your child geography, like, for example, because obviously I didn't go to school in the US, but the elementary school, but I have friends with kids, so I sort of have a general idea. So that's pretty much what it is. And I feel like that's when bookkeepers come into play because we can point out a few things for you. So you don't have to look at QuickBooks every day. Then we can sit together once a month and then we go after I clean it up, after I look at things, then I prepare reports and I'm like, listen, this is what's happening. Like, is that an issue? Like, why did you spend more this month than previous month? So this is like a catch-up session once a month for me to like bring it all to your attention. And another things which helps with bookkeepers, or like me personally, I can help if there's any issues. Like, for example, if you're using card readers, they are supposed to batch after midnight or whatever the setup is, but they're electronic devices. If when they batch, they send credit cards to processing, but there might be a glitch and they don't process. So then I can catch this because I compare the reports. I'm like, okay, so in your bank, you don't have the money that you made like Monday. So this is me like catching all those things. Or if there's a fraudulent transactions on your card, because you're busy, you don't always check like every transaction, but we'll be able to notice that. In one of the jobs that I did, we had a sales rep that was traveling a lot, and he had a corporate card, and all of a sudden it was like $20 at random gas stations. So it's $20. So when you see $20, like it's not a big deal. But then we've noticed that and we caught it and we closed the card because his card was compromised. And the scammers, they don't go for like big ticket items. They're just going to do little things, especially at the beginning. So when you're busy and you see $10 or $20 charge at gas station, you don't think about it twice.
Right.
But I can actually see it because I will see that, oh, like, for example, I mean, obviously gas station, that's another thing which I said, this is like depending on how you decide to do your a car situation. So that might not be the best example with the gas station, but let's say Target or Walmart or CVS, those like places that you go a lot to. And then I can, I've noticed like, you went 5 times to Target over the past 5 days.
Mine's Uber Eats. You would yell at me about my Uber Eats, but I call it outsourcing. That's how I outsource.
That's funny. So I had another client, which she actually didn't know she signed up for Uber subscription. So her card started being charged $9.99 every month. And then she's like, oh my gosh, like I didn't mean to. So she actually called Uber Eats and she canceled that. So it's just something, it's like a second pair of eyes, because this is me focusing. That's my main focus. You have other things to focus on, running your business. So it's like I mentioned, it takes a village. So it's just me being another person helping you out, in like running the business.
Well, that's so brilliant too, because I know a lot of times we're booked solid. Like I don't even have breaks. A lot of times I just would book, because I had such a full clientele that I have to be able to get those people in. So I don't have breaks for lunch. So by the end of the day, the very last thing I want to do is compare my sales for the day to my bank statements and what's being deposited. I don't even honestly think about it. I'm like, okay, I look at I always do my numbers at the end of the day. So I'm like, okay, I sold this much, had this much gratuity. I check them, but then I never cross-reference them. I always kind of stopped at that step. So to have that second set of eyes, that's like, wait a second, Nichole, this says that you sold $500, but it's missing from your bank. Like, where is it? And especially if I know my point of sale system deposits every day. So I'm just expecting deposits every day. So I don't really catch if there isn't something. So to have that second set of eyes to really catch is, it's extremely beneficial, because like you said, we could be losing money off of write-offs. We could be losing money that's never deposited. There's so many little areas that we could be losing money that we're not even aware of because we don't have someone keeping track of our books for us. I just have a couple quick more questions for you, but I wanted to get your opinion on owner draws. For those of you that don't know, and forgive me if I don't say this correctly, but when you own your own business, you just don't pay your personal expenses out of your business account. It gets very tricky when you do it that way, and it's not the proper way to do it. You should be paying yourself a lump sum or an owner draw or like a payroll scenario, and then paying your expenses from an owner's draw. Is that correct? And what should be an owner draw in your opinion? Should it be like a percentage of your income that you should be paying yourself? Should it be weekly, monthly? Like, what is your opinion when it comes to that?
Yes. So owners draw definitely like a chunk of money instead of like, just don't pay yourself
You look like
using a
you've gone through
company
quite
card.
a few books that have had personal expenses on the business accounts.
Yes, and it gets very tricky. It just gets, apart from being illegal in a way, it just gets very messy. And because you can have a target personal expense and business expense, and then we have to investigate. And the thing is that it's, so when you decide, you take the draw, so you pretty much withdraw the money from your business account to your personal account, and it comes down to just monitoring, like you see the cash flow. And so once you start, obviously from the beginning, and a lot of business owners will say, I don't even pay myself, because from day one, it's really hard. Like you just, so ideally you have some money set aside, like your, or like you have a spouse working, or you have just like an emergency fund that you're using it, that was set before you started a business, and that's what you use. And then once you start, start running the business, once you see that the money, there's a surplus of money one way or the other, like you can start withdrawing, but it's really, you have to remember putting 30% aside for taxes, and then whatever's left, you withdraw. I believe it's better to do like a smaller withdrawals throughout the month instead of just waiting for a big chunk, because you'll be like, oh, I'm going to take $2,000-$3,000 at the end of the month. Yeah. But then you forget about a big expense, and this expense will come in and it's going to put you in negative. So it's really scary. So it's either just to pay yourself in small amounts and see how it goes. So like I would say weekly. Obviously, like when people are on payroll, like ideally people will be paid weekly, but because payroll is expensive to run, so a lot of companies do bi-weekly because there's a payroll processing. But overall, the more often you get paid, the better for everybody, because you can budget your expenses better. Even like when you work for somebody, you can plan your life better. When I work in London, like you actually get paid once a month, and that's like a standard. So you learn how to budget this way, but it's like, it's very, obviously people live like that, so everybody's used to it. But for somebody who came from States being paid weekly or bi-weekly to being paid monthly, I had to change my mindset. So definitely, small payments throughout the month is the best way to go. And looking, so the cash flow, I know it's like everybody talks cash flow. It's pretty much just looking where your money's going and where, your money in and money out. So you just look at it. From the beginning, it's going to be very basic. You cannot really, because one month you have $100, another one of expensive, another one you're going to have 2,000. So when you start a business, it fluctuates. But once you getting steady in your business operations, it just becomes very predictable. So that's how, once you get to that point, that's very predictable. You can actually, if you decide to pay yourself once a month because you feel like you prefer that way, it's fine. But just wait until it's predictable, because this way you don't want to be transferring the money in your bank account and next day you're going to transfer back because you forgot about the expense coming. So that's one side, and that's considered owner's draw. And just the things I want to mention, you pay your taxes based on what money your business made, not how much money you took out from the business. Especially when you're an LLC and you're doing the pass-through entity on your regular taxes. Once your business gets to about, which is like a general rule, $50,000 of net profit. So profit after you pay for your supplies, after pay for your electrical bills, all the insurances, marketing, everything, the bottom line net profit after this, if this one is about $50,000, it's advised for you to change your tax classification to an S Corp. So you still are an LLC. Okay. You still are an LLC, but you're filing as an S Corp, and those taxes are more complicated. And for this one, you definitely need the CPA. It's a little bit pricier to file it, but it just saves you money, because what you do as an S Corp, you have to put yourself on payroll, and you don't have to pay yourself hundreds of thousands of dollars. It's like a general. It's usually like your CPA will advise you, but it's like has to be like reasonable salary, and you pay your employment taxes. So you pay your employer part and your employee part, but you are not taxed on the money you withdraw from the business. So it's a little bit trickier, but that's why the CPA comes really handy, especially because with estheticians, getting to $50,000 net, it can get very quick. Like you've seen this, like it can be 12 months and you're already there. So this is very, very important to remember that. And so then the situation changes a little bit. because then you consider a corporation, you're taxed as a corporation. So it's a little bit more complex to file those taxes. And another things I want to talk about, it's because that's obviously the scary part, not the scary part, the trickier part, but when you're withdrawing money from the business, but also a lot of times you spend your personal money on a business and then you just wave your hand, you're like, oh, that's fine. But this is because, but you should actually have this expense recorded in your QuickBooks. But because your personal account is not connected to QuickBooks, an accountant or bookkeeper, I would make it's called journal entry. So I'm going to make target, and instead of method of payment, it's called owner's investment. So this way we recorded that. And so you are actually recording all of it, and you're not just spending your personal money and just waving a hand at all. It's because you're not going to get a tax. It's not going to be a tax deduction, and those can add up like throughout the year. Each time you wave your hand at target, and it can actually come up to like a solid number. So I feel like that's important to remember. Like anything personal with money in or money out, it's good to always have your bookkeeper monitor it or help you out with this, because once you start playing around, it just gets, the numbers are not showing the true situation of your business.
And it's very important. I've learned this too with working with like financial advisors or accountants. It's very important to think about the future of your business. And you were talking about the EIN, and the EIN is essentially the social security number for your business. That's how, like you said, how you hire employees. It's how they identify. Obviously, a lot of us, the goal, if we have high expenses, is not to have to pay high taxes on top of that. But what you have to remember is the value of your business. So if you're just starting off and you have all these write-offs and you're not making a lot of money in the first year, that's something. Now, if you're 5-10 years down the road and you're still writing a lot of stuff off, it looks like you've made no money this year. Well, now if you want to get some sort of loan, now if you want to, and a business loan, now if you want to sell your business, maybe you're like, okay, well, I'm done with my spa. I built this $1 million spa. I want to sell it. When you have that much write-offs and stuff on your taxes and you make it look like you make no money, you've now devalued your business. So it's something to keep in mind too. Like, the first couple of years, yes, absolutely. And we want to have our write-offs. We want to pay ourselves fairly. But if your long-term goal is to maybe build something and sell it, or if your long-term goal is to really build a brand and be able to capitalize on it, we have to be smart about keeping the value of our business. Is that correct? Is that what you would say? Because that's what I've been told before.
Yes. So of course you want to have expenses that are actually legitimate expenses for a business, not just because you want to lower the bottom line. Another thing to remember is that I don't remember if it's 3 years, but if for 3 consecutive years you're going to show a loss, IRS is going to consider it a hobby from that point on. So and I'm not sure what actually going to happen afterwards, but I know that was something that I'm not sure if you're going to get a letter from IRS. Like honestly, I've never been to that situation, but I've read about it, that you cannot, if you're starting a business, you cannot show loss for a certain number of consecutive years without a reasonable explanation, because they're probably going to audit you and then will ask you like, so what's going on? Like you're running it 5 years and you're still showing a loss. So and so this is something to keep in mind. Like businesses are started to be profitable. Like and so you have to show profit. And like lowering your taxes is like lowering the tax on a personal level. So technically, it's not necessary because your business, especially at the beginning, is part of your personal taxes. So, like this is what, let's say in real estate investors do. Like they have a house and they rent it out. The house makes a profit, but then they take that profit, invest on other property. So it's not like they're going to just do so many remodels and write-offs that this house is worthless. No, they're just going to use the money. So then at the end, the investment offsets and investment, they can, obviously there's like depreciation, all this stuff that goes into real estate. So, and I'm not specializing in that, but it's pretty much, that's how you offset or lower your tax liability down the road. It's not just writing off for one same business. So let's say if the business is doing really well, then you open another location, and then, so that's pretty much how you do this, how you lower your taxes in the long run, because you keep reinvesting the money, but not just writing off everything. It's just like at some point it's just going to look funny and it's going to look like it doesn't make sense. And Of
Right.
course, none of the businesses exist in a vacuum. Like there's hundreds, if not thousands, of estheticians. Well, IRS is a federal company, so they look into entire states, so they can compare. Like they have a similar businesses to compare. So it's not like every business is unique, but not that unique. Just as human beings,
Yeah.
as much as we think we're unique, we're not that unique. We're still, there's a herd mentality. Like statistics are still showing that we're just thinking alike. So same thing like with the business, like IRS can compare, or I don't want to say IRS, I don't want to scare people, but pretty much like they're comparable. So you should be able to make certain profit based on how other businesses are doing. So you start showing a loss, it's just not going to make sense, and it's going to flag the business up. That's pretty much how I see it.
Well, that's a really good piece of advice. I feel like that was something important to say because, like I said, we all want to have all of our write-offs, and we all want to pay our lease amount. But then when it comes to growing your brand, it just completely devalues your business in its own. As a parting piece of advice, what financial tip would you offer to estheticians to help them thrive both their professional and financial journeys? What's your last tip of advice for estheticians to be successful?
So pretty much just reiterating, start small, start slow, ask a lot of questions, try to find your village from the very beginning, and get into habit of tracking things, whether it's your time, whether it's money, just tracking things. And it doesn't have to be like, every hour you sit down and just write it down. No, it can be at the end of the day, it could be end of the week, depending, because at the beginning of your business, you might not be that busy, but just get in habit of tracking everything, keeping all the receipts. The laws are changing, the rules are changing, but it's better to be safe than sorry. Yeah. And when you start it this way, then as you grow, you see that those habits will just help you be more successful and have the best foundation of pretty much just building your empire.
Well, thank you so much. Thank you so much for all the knowledge. I feel like there's so much more that we can go over at some point between retirement plans and everything. There's just so much we can go over with you. But thank you so much for being here. You have also graciously donated yourself and your time to our signature program, which we only launch twice a year. You are our resident financial advisor, whether you like it now or not. You are our resident esthetician, financial bookkeeper advisor. So you have actually, anyone who buys that program gets to spend 5 hours with you learning QuickBooks, and you get to teach them how to do the tracking. And then hopefully they can carry on with you afterwards and utilize you as their bookkeeper to keep them on that great financial journey. And we'll be launching that program again in March of 2024. But thank you so much again for being here today. Thank you so much for all the knowledge. I really appreciate it. And I know that a lot of estheticians are really going to appreciate everything you shared with us today. So thank you so much for being here.
Thank you so much, Nichole, for having me. And thanks everyone for listening.
Thank you for joining me on another empowering episode of Spa Boss Talks. I hope you found valuable insights that will propel your aesthetic business to new heights. Remember, your success is our mission. And before we part ways, I've got an exclusive offer just for our dedicated listeners. For the next 7 days, you can join our thriving community for just $1. That's right, $1 unlocks 30 days of premium access to a network of like-minded estheticians, weekly mentors, exclusive resources, and insider tips. Visit our website, beautybabesonline.com, click on programs, and then private community to claim your $1 trial. Don't miss out on this opportunity to connect, learn, and grow with a community that's as passionate about spa success as you are. As we wrap up today's episode, remember, you're not just an esthetician, you're a spa boss in the making. Until next time, stay inspired, stay confident, and keep conquering the world of aesthetics. And this is Nichole Lancaster signing off from Spa Boss Talk.